Welcome. Let's get going. Just bear with me one moment. I sort one final thing out. Yeah, let's get going. Right, let's talk about day trading. And I'm going to talk to you about oil, indices, gold, and then we'll look at some Forex as well. What I'm going to do is I'm going to do a short 10-minute presentation, and then if you want to ask some questions, chat about different markets, we just unmute you, and then you can ask what you want, and we can go through that. Okay, so what I'm looking at is oil on a 10-minute chart. And what I normally do is, there's a few things I'm interested in day trading. If you want breakouts, then you've got to be very, very switched on to chart patterns and keep a very, very close eye on what the volume's doing. For example, let's look at this drop in oil on a 10-minute chart. This was 2 o'clock. So that's 2 o'clock UK time is when the old oil trading pits used to open. So that's 9 o'clock New York time anyway, and this is when the volume comes in. So if you've got what I'd like to do is mark off the open range. So that's the first 10 minutes of the main session on this particular day, which was Friday. So this is 2 o'clock UK time, 9 a.m. New York. We got a lower close at the open, and we spent the rest of the day dropping until we got a bounce into the evening, into the end of the session close. Okay, so in terms of chart patterns, if you look at these three wave patterns, so you effectively in the first 10 minutes, and certainly the confirmation second 20 minutes, you've got a market that is breaking down, comes back into the London support. London support is here. And you notice we just kept closing lower into the London support. So that is your signal that market is not going to continue. So that's just one basic strategy. Now, the thing is with day trading is to be a success at day trading, you need a few things. You need to be very, very clear about what type of trading suits you. If you are, if you literally just got 30, 60 minutes to spare and that's it, you don't want to spend any more time at your screens, or you want to get back to work or whatever it is, then you need a strategy that uses much smaller time frames. Notice that I've not shown you very small time frames here. In terms of day trading, 10 minutes is quite a reasonable amount of time. A lot of day traders, or particularly scalpers, who are only after 20, 30, 40 pips, they will look at anything from 1 minute charts to 2 minute charts to 5 minute charts. Nothing wrong with that. But the point is two things. A, you've got to be clear about what type of trading suits you. If you want to be in and out, then you need to be very clued up, well prepared, ready for the open, and be very, very clear about your entries and exits. In other words, you've got to have a system. I prefer intraday trading, so I'm not looking for little 10, 20, 30 pip moves. I'm looking for 50 to 100 pip moves, if not more. So that's why I like to look at the first 10 minutes. This is just an indication of the strategies I use, by the way. This is not the actual strategy. I'm not going to sit here and just reveal all the strategies I use. I'm just going to give you an indication of what I look for. All right, so that's what happened on Friday. Let's have a look at what happened today on oil, and then we'll look at some other markets as well. So oil today at the open was here. So very similar to Friday. You open up with a lower close. We look as if we're going to drop. So this is where risk management comes in. That looks very, very similar to Friday, but in this case, oil has turned around 40 minutes into this and is sitting above that open range. So if you were very bearish and you got short, you need to be very clear about when you're going to get out, when you're going to take a loss, and what you're going to do. Having taken a loss, what are you going to do after that? Are you going to get back in the trade? Are you going to leave that market for a day? You're going to close your account? What are you going to do? You've got to have a plan. Now, so if you've got a market that is, you know, firing one way and there's a significant volume to the downside later on, you just got to be very, very clear about what you want to do, how you're going to conduct yourself in the market to protect your capital. Okay, so on this particular day, oil looked lower in certainly this time frame, and then pinged back up. You look at the bigger time frame, and this is where intraday trading comes into account. This is a 3-hour chart. Again, I don't use a 3-hour chart, but I'm going to give you an indication of what I would look for. So you have, let's look at this last big range. We've got oil up there at 83.45, and we drop down there to 63.80. You can see we are right up against a lot of resistance here. You can see if I mark that zone, we've been up here on the 8th of May, 10th of May, 19th of May, and here we are again, attempting to break through this 73.50, 73.60. So this is a very, very tough area for oil. And I'm actually short this oil because if this breaks down here, so at the moment we pushed above that trend line, but this is a huge wall of resistance for the oil. So I sold the resistance with a very tight stop and looking to see if that can start to really back off, close underneath that resistance. In other words, do what it did on the 19th and the 8th and the 10th. And if we can drop underneath 71.30, then I think we're going to come back to at least 68 and potentially down 65, and who knows, maybe more. So I'm bearish the oil at the moment, but I would even turn around and flip that on the upside if that got more bullish. We've got Fed tomorrow, so we've got it's only Fed minutes, which is not significant. The main issue with this week is we have US GDP on Thursday. So it's not to say if we get a good number, then these markets are all going up, but what we need to see is what is the reaction to the data. We need to monitor what the market is doing once the data's out. Okay, so difference between scalping intraday and intra-week trading is all the way down to timeframes. Because if you look, okay, this was selling at these highs here on the 8th and 10th. But look what was happening on the 15th, the 17th, and the 22nd. These were all higher closes of major levels of support, which have taken that back into 73.60. Okay, so if you look at the daily chart, you can see there's that wall of resistance again, clearly mapped out. It was support in January, February. It broke down here in middle of March, broke down on the 10th of May, and here we are attacking it again, looking to see if we can sell and drop back to support. If we drop back to support, I think we might go head towards as low as 60. So after that post-war climb, ever since, so literally a few weeks after war was declared in Ukraine, we peaked lower high here in June 22, and we are really struggling here at the moment. So like I said, if we do fall back here and sell at this resistance, then I think we're going to come and tap these lows again and potentially go down to 60. Close higher here, break through that resistance, and we're going to head back to 80, potentially at 85, 100. Right, so let's look at different markets. Look at gold, and then we'll look at the indices. So we've got, let's take this off. Let's look at the open on this one. Right, so we have a nice little breakout pattern here. So we closed higher into the open and just kept going, and then we pulled back 2.5 hours after the open and then went back to the highs again. And that's typical. If you are going to get a market that's going to break up, so we bottomed here into London, pulled back into this support at the New York Open, and then did a 1, 2, 3 wave move, and the wave 3 is still in play at the moment, and we could potentially go back to 1980 plus. I think with Fed minutes tomorrow and GDP on Thursday, I think these markets are going to want to hang around a bit longer. Don't look, if you spend your time looking for breakouts and home runs, you could potentially give back a lot of profits. Again, an exit strategy has got to be a core part of your plan, and that's what I'm going to talk to you about later on. Right, let's have a look at the S&Ps open, and then we'll look at the FTSE. S&Ps, again, right, open on S&Ps was 2:30 UK time. So we held up into the open. So these markets are showing the tighter ranges and the volatility that we're getting pre all this data that's coming out. It's also it's a short week next week, isn't it, for most nations? So the S&Ps came into a lot of resistance, and so seeing this sort of short sell-off here as we hit support down there, and then we're back. We're very close to where we opened. So the open range on this was 41.73 on a low and a high of 41.79. And we're just popping either side of the range. That's a clear sign of a market that's not going to give you much. What you really want in a good, if you're going to get a good move intraday, you've got to stay one side or the other of this. Any market that keeps tipping other side is going to either you look for very small moves, short-term moves, or you back off. So we closed higher above the open range, and we closed lower above the open range, and now we're just sitting on the open range low. So that's not what you really want in a good trending day is to pop up, hold the open, come back. So make a move, hold the open high, or potentially come into the mid-range and then pop back out again and go back into resistance. This market popped up and then popped down again. So that's what you don't want. You don't want this shifting either side of the range. You want it to stay one day one way or stay the other. And if you get good trending markets on these ranges, you can get really, really good points. You can trade this both ways if you're at your screens for a long time and you've really got a clear way of trading smaller time frames. Otherwise, steer clear. Okay, so the way I trade here is I've got in my trading room, I've got what I call an anchor chart. So that allows me to measure the a particular range, which I'm not going to reveal. And then that anchor chart is anchoring my thoughts and my strategies for that day. Because if the anchor chart is selling on the previous day's high, or we've broken up and we're holding the previous day's high, then I would buy. So if we have a really nice move up, let's say for example this S&P pushed up, pulled back to the open range, and then went on a run. If we ultimately held the previous day's high and came back, so broke it, came back and hold it, I will get back in there and then trade that back up. That's one strategy I've got. If we are trading around the previous day's low and closing underneath it, then I would definitely get short and then look for extensions to the downside. But like I said, this is the day traders no-no. You know, popping one side, popping the other, and then coming back in the range, and then not showing a clear direction. All right, so I've got 3 strategies. I like to, if the previous day, strategy number 1, if the previous day's high is holding, I will buy that high. Strategy number 2, I trade zone pullbacks. So if you've got a really good trending market, let's clear this up. If a market's had a really good day the previous day, let's say the previous day it shot up, and the next day, if it came back into the zonal support and held, I would buy and then see if we can go back to the previous day's high. And what also, if we start at an extension, so we open the markets way outside of the previous day's range, then I would buy and see if it trades back to the mean range, mean average. And likewise, if we open too high, that's the previous day's range, and we open at an extension, then I would short that. I would flip it if it held the previous day's high. If it started closing underneath the previous day's high, I'll hang on. So there's 3 core strategies. I also like to, if you've got a big data that day, in other words, you've got, to say you've got non-farm payroll, first Friday in the month. If you open in a certain range on that 130 data, then I'll look to see how the market behaves in the open session in relation to that data range. So if it holds it, I'll buy. If it closes underneath it, I'll sell a pullback and short it on that range. All right, all of this is, I've got finer ways of fine-tuning my entries, but it's all part of my system. This system was designed in 07-06 during a huge oil commodity boom, and I developed it and refined it, applied it to other markets, and realized other momentum markets work with it very, very well. Let's look at the euro. So let's see what happened to the euro today. This is recorded, so anybody who's watching it on YouTube and missed the beginning or has just joined, I will send you the link. Right, let's have a look at the London Open on the euro. Where are we? Right, London Open on the euro is here. That's the open range. So you see, this is a good trending day as opposed to a messy day that we're seeing on the US indices at the moment. If you've got there you've got the direction in the first 30 minutes of the open. You pull back to the open range, so that's the high and low of the open range, the pink zone. So we pull back to the midpoint of it, and then you get the direction. So it's a 1, 2, 3-way move. 4, 5 completes the move, and now we then got a short Dickap, a little bit of a mini Dickap bounce. All the short sellers have closed their contracts and created a bit of a bounce. But then all we do is then we start to rotate back to the initial trend. Now this is where a lot of traders lose money, because they see a market. If you've got a market that's where the initial direction is selling, most days, not all, but most days, any pullbacks in a weekday will be sold into. So a lot of traders will come along, a little less experienced traders will see that breaking up and think, oh right, okay, that's all this selling's over and done with, I'll buy that. But the main moves have been, once you've got that sell at the open, the main moves on this one were selling. So it just retraced back into resistance and then did another deeper 3-way move and made a new low. So don't start buying and trying to pick bottoms. That's where you're really going to lose money if you try and pick bottoms. Stick to the open trend and trade any moves that act as pullbacks into the opening trend. So we saw a low of 107.63. We did a bounce to 107.95. So we weren't even able to make 108. And then we'd make a new low down there at 107.60. So that's the trick. Don't pick bottoms, trade the open trend and trade pullbacks. Okay. Now, if you want to learn about my system, let me just go and give you the, I'm running the program next Tuesday. So if you want to join me, message me for details, because once you come on the program, then you can come into my live trading room and you'll see in much finer detail how we pick entries, and more importantly, how we pick exits. Taking a trade in a trend is not that difficult if you're assuming you're properly prepared. Exits are a harder aspect, and that's something you need to know where you're going to get out of that trade. And again, that comes back to your trading style that suits you. If you are looking for intraday, then you need to look at exits on one level. If you're scalping, then you need to be very specific, particularly if you're using a lot of leverage. You need to be very clear in your mind where you are going to get out and how you're going to protect your account if you're using a lot of leverage. Anybody got any questions? I'll turn your mics on if you want to ask a question. Otherwise, I've been talking for 25 minutes, so I've given you a quick intro into what I'm up to. Let's have a look at this gold. Yeah, so the gold's got a really strong direction here. But yeah, I don't actually trade Bitcoin. I'm happy to let's have a look at Bitcoin. So we've got a lot of support down, or in this small time frame, a lot of support at 26,800. Yeah, so we broke out overnight, didn't we? Started to bottom overnight Monday, broke out. So Monday, midday London, we pushed up into 27,100. Have a look at the London, see if there's a London range on this. What happened? Yeah, so most of the move was over during London on this. Oh, the London range is really tight. Very, very tight. Let's look at the daily on this. Okay, so it's a bullish consolidation. Bullish consolidations are normally over or after a drop. So Friday the 12th, we dropped into that low, and wow, been really tight range otherwise. This is not going anywhere, is it, at the moment? I think that needs a much, much deeper drop. I think it's got to come down to at least 25 before that's getting ready to go. But day trading on this does not seem to be very profitable. The euro is moving more on this in the London session than this one is. Let's pick another London Open. Seems to do a lot of moves in the Asian period. You know what? I can see this coming back down to at least 20,000. It looks to me like this is more of a corrective wave. It's clearly a downtrend. It got beaten up after that move into. Yeah, I posted a sell signal on this in November 21, and I took a lot of abuse over that. I posted a sell signal because of these gaps. We had a gap. I can't remember what the gaps are now. But basically, what Bitcoin's done on the way down here is it's filled a lot of gaps. I think whichever way we come out of this apex, it's going to be the direction for Bitcoin. So if we close under 26, I can see that coming all the way back down to 20 and possibly lower. If we close above 27, 28, I can see that going back to 30, 32, and potentially 35. But what's going on here in Bitcoin, what's going on here is potentially what happened here. A lot of selling, pulls back into resistance, doesn't hold, and then collapses. We've got a 1, 2, 3-way correction into that same drop zone. And now we've got a 1, 2, 3-way move into this support. But if we stay under that 20-day average and close underneath that 26, I can see that lower. And I have always thought in recent times that's going to want to come and find 10,000. But I'm happy to be proved wrong. Long term, I think it's got a great future. But at the moment, I don't think. Look at the volume on this. Just look at the volume alone. look at the trend and the volume. We're seeing got a lower high here in volume on the 4th of March. The averages are still pointing lower on the volume. So if this is not supported, if there's not support out there, this is coming lower. So I'm not, I can see that dropping out of there. I think also the chart pattern to me is a little bit of a shoulder, head, shoulder. So this is the neckline. So we break that neckline, then this is going to tip right down. I've no idea what a Wyckoff pattern is, I'm afraid. Right. Okay. Any other questions? Like I said, if you want to join me on my program, drop me a line and I will talk to you about that. Like I said, I'm short oil at the moment. I'm looking to see if oil can so at the top of this little channel, if we reject this resistance and close underneath 70.40, like I say, I can see this coming down, but maybe as low as 60, maybe. But I'll flip it if we start closing above 73, 74, and trade it up to 85 plus. But at the moment, I am short. Brilliant. All right. Thank you very much. Thanks for joining me. Any other questions? The Dow, sorry, let's have a look at the 10-minute chart on the, yeah. So we've come back into the open range and now we're selling on the S&Ps. Brilliant. And I'll be here again 6 o'clock next Tuesday. Look out for the reminder links on Zoom and running the program next Tuesday as well. Let me know if you've got any questions and have a good evening. Thanks very much.